Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting. Hello friends. I am attempting to make a series of videos to cover certain points, certain views that I have learned over my life about personal finance. That means finance handled by an individual or a family. There should be a basic understanding of what is personal finance, which I will try to explain in this preface or introduction video. Firstly, the accounting profession, the curriculum and syllabus for accounting profession across the globe, from whatever I know, from US or Australia, from China, UK and even India, 95% of the syllabus goes towards business finance and only remaining 5% towards personal finance. This 5% towards personal finance is a very high estimate by me. I am not very comfortable saying even 5% covers personal finance in educational curriculum, and that even for active professional education. The personal finance education practically travels from individual knowledge or family level knowledge. Generally, people learn from what their parents do, what the elders around them do. Like in India, we have a very strong family structure, so there are always elders who will do problem solving, and younger ones will learn from the elders. May not be by teaching, just by looking at what they do or what they have done in their life. Another major point when I touch upon cultural history is that the Eastern world has always historically been driven by savings-based economy, which means people look to earn money, spend that money, accumulate a surplus from the earning, and with that surplus they try to make more money. This is actually savings based economy. This is how India has been, China has been, and India until very recently, I would say. In contrast, the Western culture, primarily US, at least in the last 100 years or so, have become a credit based economy, which means money is borrowed and spent, and later people earn and repay that loan. This has been the culture in the Western world at least for last 100 years or so, and I am not very sure about history beyond that. There is a very clear savings based culture in Eastern world, countries like China, Japan, India and places in Asia. Since I come from India, I can guarantee this has been the economic culture in India until recently. So how this income, expenditure, savings which accumulated as surplus, and then how the surplus gets turned into bigger wealth is what I term or I call as personal finance. That is the knowledge or a life skill one should acquire in terms of personal finance. Okay. Personal finance per se should be looked at as a journey. This applies even to businesses and many other fields, that is to look at it as a journey. For every individual, their own finance is a journey in their life. Taking an example from my perspective, I started my career at a particular age. I started earning. I started growing in my career. I started earning more, and there came a point where my earnings are greater than my expenses. That is when savings starts. Those savings, when accumulated, uh, gets put into something and that actually generates wealth. It is widely said money makes money. This accumulated surplus is what actually creates one's wealth. The earnings alone cannot create huge wealth. That is the basic idea. Earnings primarily goes into managing the livelihood. That is why I am always relating income and expenditure. Income and expenditure happens as part of life. Okay, when the income is more than the expenditure, surplus gets accumulated and surplus goes into wealth creation. Whatever we earn, whether we do business, whether we go for employment, whatever we do in our life, the primary purpose is to meet the livelihood. Let us say food, clothing, shelter, the basic needs, along with let us say children's education, medical facilities, are the basic things that we have to meet on an everyday basis. So the earnings primarily goes into managing this livelihood and managing the expenditure portion. And in that process, we are supposed to create a surplus. That surplus creation becomes the fundamental platform, the basic foundation on which wealth generation that we are talking about happens. This is the basic structure of personal finance that we are going to discuss in this series. See, I was telling to look at this as a journey. Like you can take any journey, like you travel from one city to another. You go on a trip from, let us say, from Chennai to Mumbai. There are different routes that you can take. One is the mode of transport. You can take air, rail or road as mode of transport. And depending on that, there will be different stoppage points. Like you can take a break for food, you can take a break to rest, you can have a break for a coffee, you can stay overnight in a particular place. So there are many stoppages in between. In addition, taking the same example of going from Chennai to Mumbai, you can choose to go via Kerala, go straight from Chennai, hit the Western Ghats, go through the Ghat road or the coastal road, go through Karnataka, enter into Maharashtra and reach Mumbai. Other way, you can take a non-coastal route. From Chennai, you can enter into, let us say, southern Andhra or through Karnataka, Bangalore. Okay, get into central Maharashtra and you can reach Mumbai if you go by road. The route or the mode of transport or the stoppage points which a person chooses is as per their choice depending on their circumstances. So every journey, okay, the choices are available, choices are made by individuals, and those choices that we make decides the length or comfort or duration of the journey. The same logic applies to personal finance also. That is exactly what I mean by saying you should look at it as a journey. When I say a journey, we should also talk about a starting point. When I say starting point in financial journey, it does not actually relate to the age at which you are starting your career. A person starts a financial journey means the person has understood what you do in finance. The moment you realize and understand what you do in your finance, you have started your financial journey. I have known kids who are 12-year-old, 13-year-old, who are well aware of financial implications, financial needs, where the money is coming from, how their parents are making that money. So these kids, okay, they understand the financial implication or financial perspective of their actions. There are kids who read on photocopy material. They don't buy the original books just to save money for their parents. That understanding and realization of the money part in the actions is when a financial journey starts. It is definitely not the age of starting the earning. It is not the age of starting the spending. According to me, the start happens when you internally realize what you are doing with your finances. As I said before, finance includes income, expenditure, surplus accumulation, and wealth generation. I consciously avoid talking about managing shortfall because that is a different subject, different branch, and only when you overcome the shortfall and get into surplus, we can talk about wealth generation. Those can be discussed separately. So here I am talking about income, expenditure, surplus generation, and wealth accumulation. So the moment one realizes what is the income part, what is the expenditure part, how the surplus gets accumulated, how it is going to be managed, that realization point is the start of the financial journey. I know people even at the age of 60, 70, 80, even those retired people, okay, they don't understand this financial personal finance. To me, they have never started their financial journey. There is nothing wrong even if somebody has not had a financial journey. Everybody has their own purpose in life. They would have had different journey in their life. They may not even need to have a finance journey. So it depends only on the understanding and realizing of finances, and nothing to do with age or career or any other aspects of life. If somebody wants a financial journey in their life, like I said, they need to understand the financial structure and start the journey. This journey takes them through in their life. Like I said, travel from one city to another. Even in financial journey, there will be a destination, and depending on each individual choices, in the journey you come across different stoppage points or different routes. Okay. One stoppage point that everybody will come across is retirement. Nobody can work throughout their life. It is impractical. There are people, so some people I have seen in my life who work throughout their life, but I personally feel there has to be a retirement point for everyone. This is not only from societal perspective or national economy perspective or even medical perspective. Every individual has different stages of life, and retirement has to happen at a particular point so that the life cycle or life circle gets complete. So whatever you plan in your financial journey, okay, retirement is one important and unavoidable point of journey. When I said the starting point of a financial journey is understanding and realizing the financial structure, okay, then what becomes the end point? Is retirement the end point? If you look at it as a journey, it is not so. Actually, the end point is only the end of life. Okay, you have to have your financial journey until the end of your life. So retirement is only a in-between point. A person, when they realize, okay, I said the example of 12-year-old, 13-year-old kids, okay, they realize the financial implications, but they may not be able to commence earning money. Okay, but they will have a plan. Okay, when they graduate or when they post-graduate, okay, they will go to employment or they will start a business. Okay, all this they will have plan. That plan, making that plan is also part of financial journey. In between, okay, like there will be marriage in everybody's life. Okay, there will be children. Okay, the parents will age off. Okay, so we have to take care of the parents. Okay, all these are different points or different aspects of this financial journey. And how we structure this are all what we are going to discuss in different topics, different videos in this series. One has to clearly understand, okay, in this financial journey, each individual is different. Okay. Even two brothers coming from the same house, even if they have same education, let us say both are doctors, their financial journey need not be the same. Every individual has to decide what is their starting point, what their path of journey, the route of journey is, where they want to reach, what is their destination, what are the in-between stoppage points they want to have. All these are what every individual has to go through. They have to make choices, they have to decide on their own how their financial journey is going to be. Now, the most important thing in a financial journey, like any other journey I would say, okay, for many aspects of life this is applicable, the most important thing in a financial journey is discipline. The financial discipline is a very loosely used term nowadays. It is not a rope to tie you around. Okay, discipline does not tie up anybody. Discipline is simply, okay, in this case, in case of financial journey, financial discipline is you draw a path which is a plan. That means you make a plan, you try to stick to the plan as much as you can. You make your best efforts to make the plan, and you make your best efforts to stick to the plan. All of us know plan is only a plan. Okay, we may do better than the plan, we may go short, but without a plan, world cannot work. So the plan has to be made, and we have to make all our efforts to go with the plan, and also the plan has to be reviewed periodically, regularly, and if a revision is required in the plan has to be revised. This planning part, making the plan, sticking to the plan, reviewing the plan, revising the plan, and it is a cycle. This is what scores a person on financial discipline, according to me. Like I said, every individual chooses or has to go through a different journey. So each individual will have a different definition of discipline, because discipline depends on what are the choices they have made in their plan. This journey, when one understands, that is when they start their journey, the actual work begins. And you should also be mindful. Can you make a plan for 50 years? Let us say for a person starting at the age of 20, will they be able to make a plan till they are 70 or 80? Practically it is a little insane, right? We do not know what are the legal consequences, what is going to change after 5 years, after 10 years, nothing is in our hands. So making a plan for 50, 60 years is practically not possible. But what you should understand is, you should at least have a hazy picture, like a vision, okay, like a rough idea of what you want your financial journey to be after 60 years or 80 years. At the same time, a short-term plan has to be very, very actionable. You should be able to act on each part of the plan. You decide on your own what is that short term. Okay, what is the definition of that short term? It may be 1 year, it may be 2 years, it may be 5 years. But whatever you choose, you make a plan, work as per the plan, try to stick to the plan. If something is not going along, make a revision, try to stick to that revised plan. If it is possible to make only for 1 year, make it only for 1 year. However, be mindful, you should never take a easy route in any aspect of life, especially finance. If you are able to make a plan for 5 years, but still you choose to make a plan for only 1 year, there itself your indiscipline starts. That will actually create a mental block, and that will not help in the long run. So finance journey has to start at some point, has to go through different phases, and all this have to be made and considered in the plan. And in spite of working as per the plan, deviating from the plan, revising the plan, okay, we are living a life, so we should understand, okay, we have to go with what life gives us. Okay. There is a general belief, okay, accepting whatever life gives is a negative mindset. Yes, it is a negative mindset. We have to work for what we want. Simply accepting what life throws at us does not define us as human beings. At the same time, okay, there are certain things beyond our control, so certain things we have to accept as it comes. So it is a matter of balancing between these two. What is in our control, what is not in our control, what we can do, what we cannot do, what we have to go through, what we need not have to go through. Understanding this and going with the plan is what is the journey. So I touched upon the idea of the financial structure, which is basically the income, expenditure, generating surplus, making wealth. Okay, how to make a plan, stick to the plan, revising the plan. All these are what we are going to cover in subsequent videos. This initial video I am making only to start off as an introduction to get into personal finance, put the basics of personal finance in front of you, assuming most of the lot are going to be non-finance people. And when I make further videos, this introduction will give or will make more meaning to the subsequent points based on the foundation laid out here. So with that I will close this. We'll see you in the next video. Thank you. Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting.